Hello everyone, and thank you for joining us today at this Your Overseas Home webinar. My name is Rosie Bradley. I'm a senior copywriter here at Your Overseas Home. Today, I'm delighted to be joined by Robert Webb, a private wealth manager from Chase Buchanan Wealth Management, and we'll be discussing the financial considerations for those moving to Portugal. It's great to see so many of you with us today, whether you are watching live or on demand. Once Robert has shared his presentation, we'll open the floor up to questions. If you do have any as we go along, feel free to pop them in the questions tab. It's just on the right-hand side of your screen. We do hope to answer as many queries as we can today. If we don't get round to them all, don't worry. We will forward any questions over to Robert and his team at Chase Buchanan. So before we get started on your presentation, Robert, can you please introduce yourself and tell us a little bit about what Chase Buchanan does?
Yes, okay. With regard to Chase Buchanan, I will be dealing with this in the first few slides. Basically, very simply, we're a firm of international IFAs, and we're based exclusively on UK IFA, FCA lines. So in other words, we act in the best interests of the client. We source the best product and the best funds. It's as simple as that. That's Chase Buchanan. We're quite widely spread throughout Europe with a number of offices. And really, we have a number of very skilled people within the company, all the qualifications, all the experience for the client. Myself, I've been doing this for 22 years. But usefully spread equally between the UK and offshore. So I've got a foot in the UK and I've got a foot offshore. I know how they both work. So if there are cross-border issues, particularly when people are coming from the UK, so I know the tax implications, I know what to look for there, and I know how it slots in with Portugal. Because the big thing moving abroad anywhere, it's a totally different ball game. Everything changes, and really that's our task, is basically to help the client with a smooth transition from the UK box to the Portugal box. That's basically it.
Lovely, thanks Robert. I'll make your presentation big now for you.
Okay, right, okay. Slide number 1, here we are. Wait a minute. How do we find slide 2?
If you just click the arrows on your keyboard, you should.
No, it's not working.
Okay, I'll do it for you.
Yeah, okay. Right. Okay. Right. I'm going to divide the talk into 4 parts. So, in other words, I'm going to slightly repeat information about Chase Buchanan, what we offer, our offices, and then I'm going to deal with the tax essentials that you'll come across in Portugal. Okay. Right. Who are we? We're a highly regulated wealth management company. We specialize in global financial solutions for expatriates. And as I said before, that would come from our regulated European headquarters. We provide basically unbiased, unparalleled ongoing support and reviews for clients. So once we've made recommendations, it's not a question of thank you very much, we'll see you sometime. Never. We're in regular contact with clients. We have weekly updates, we have quarterly reviews and individual client reviews on a basis to be determined by the client. It can be quarterly, half yearly, annually, whatever the client wishes. Okay. Right. Our services, as I said earlier on, are really based on UK lines. So we do obviously investments, financial planning, retirement planning, UK and international pension transfers. We also deal with US connected personnel. We've got a US division. So if there's anybody listening from the States, we can help you, that's for sure, because moving from the States to Portugal is not particularly easy. So we can smooth that path for you quite easily. Okay. Our offices, as I said, we're pretty widely spread throughout Europe. Cyprus, which is our HQ, we're actually registered in Cyprus. That was purely because of Brexit, and that registration enables us to what we call passport. In other words, advise any resident within the EU, okay, which is no longer possible for UK-based IFAs. We're also in Spain, Malta, France, and Belgium. So we've got a pretty wide spread. We can cover most jurisdictions. Okay. Right, now moving on to the tax issues. I'm going to deal with this in 4 parts. I'm going to deal with income tax, capital taxes, and then some tax planning hints and some financial planning hints as well. Okay, right. Now, when it comes to income tax, it's the principle is exactly the same as the UK and most other countries. Income tax is dependent on your residency, your tax residency. Now, Portugal follows most major countries, and it's basically the 183-day rule. That's basically it. So in other words, if you're here in Portugal for 183 days in the calendar year, January to December, 183 days, you will be tax resident in Portugal, and your worldwide income will be subject to income tax. Okay, it's quite simple, basically the same as the UK. Okay, right. Now, income tax. You may have seen a principle of taxation in Portugal called NHR. That stood for non-habitual resident, and it was a very favourable tax concession which lasted for 10 years. And basically, the principal plank there was pensions. Pensions would have been taxed at a flat 10% for 10 years. Now, that's no longer available, and the press and the media made a lot of this and cast a lot of doom and gloom into the picture, which is not quite correct, and I'll deal with that in a second. Your worldwide income is taxed in Portugal, same as the UK, worldwide income. So if you've got income coming from Argentina or Australia, you have to declare it in Portugal. A lot of people who come here either leave their residential property or have existing rental properties in the UK. Now, if you do have property in the UK and you get rental income, that is taxed in the UK. It is not taxed in Portugal. The reason is bricks and mortar, people coming and going all the time. Leave it to the country where the property is situated. Portugal, to be blunt, really don't want to know about it. So it all goes back into the UK. UK pensions are taxed in Portugal. That comes down to your residence. UK pension is a worldwide income source, taxed in Portugal. Now, just carrying on for what I was saying about NHR, for some UK pensions, there are different taxation rates in existence. So although NHR has been abolished, there are other ways of taxing UK pensions on a very favourable basis. Now, that virtually is a subject in its own right, so I'm not going to go into detail on that. If you want more details, please get in touch with me. But the message here is that there is an alternative favourable system of taxation on pensions. Okay, yeah. When you get here, you have to. You have to go. You have to register with Finances. That's basically the equivalent of HMRC, and you have to make one annual return. That's it, and it's coming up now. So For the previous tax year, 23, you have until this June and each successive June to file a return. So it's quite generous. You've got quite a bit of time. Okay, right. Okay, next, capital taxes. Capital gains tax here is at 28%. There is no allowance as there is in the UK. So that is a significant difference. UK property, right, if you sell that, so if you sell your buy to let and make a capital gain, that's payable in the UK. Again, the reason is bricks and mortar, all the complications that leads. Most double taxation agreements leave the taxation of property to the country where it is situated. So that includes UK property. Right. However, share gains, if you make gains on sale of shares outside Portugal, that's taxed in Portugal, and that would almost certainly be at 28%. The other good news is there's no wealth tax here at all. There is next door in Spain, but nothing here. Property tax, that is payable on property valued at over 1.2 million. Okay, and it's not like council tax in the UK where it's through the roof. The property tax is very small. It's only about 0.3 of 1% of the value in most cases. It does vary according to locations, but it's not a great amount. VAT, that varies between 6 and 23%, so slightly better than the UK, which of course is basically fixed. So you've got a little bit of margin to play around with there. Inheritance tax, this is a massive subject. A lot of people come down here and think because they've left the UK inheritance no longer applies. Well, I'm sorry to say the bad news is it does. For at the very least 5 years after departure from the UK. So that's the message. UK inheritance tax does apply to UK domiciles resident in Portugal. Please don't think you're out of it after departure from the UK, because almost certainly you are not. Okay. Right, tax planning. Now, as I said earlier, this is all about boxes, what I call boxes. You're coming out of the UK box or whichever box you're in, and you're coming to Portugal, and it's a brand new box. It's a brand new ball game. Sometimes it takes quite a bit of time to adjust to that, but like everything else, time is the key thing. At first, it's all going to be a bit strange. And, oh my God, what's all this? Oh, why do they need this? Oh my God, this is happening. But eventually, you'll get there. Okay. Now, with regard to UK advisors, I said this earlier. UK advisors cannot advise in the EU countries, and that includes Portugal, unless they've got what we call permissions. Very unlikely that UK financial advisors, IFAs, or discretionary managers would actually have the permission. So once you leave the UK, basically, bluntly, your UK IFA advisor or bank advisor, whatever, is completely out of it. Now, UK pensions. In the UK, you can take 25% of your fund as a tax-free lump sum. Now, if you wait until you get down here and become resident and take the 25% cash here, it will be taxable. So the answer is take your 25% cash before you leave the UK. Critical point. With regard to, say, the balance of the pension, again, you're at the moment in the UK box. or whichever box you're in. You might want to consider being in a QROP box, which is an international pension offshore based in Malta. It's a lot easier, it's a lot flexible, and it's something that one should consider. UK ISAs. Now, this is another thing similar to the tax-free cash on the pensions. If you wait until you get down here and sell your ISAs, they're going to be taxed at 28%. If you sell them before you leave the UK, no problem. Some of you may have UK investment bonds. These are plans issued by people like Aviva, Standard Life, Scottish Widows. Without going into big detail, they are a very favourable tax-efficient vehicle in the UK, and you can take certain amounts each year without immediate liability to tax. But if you keep your UK investment bond and come down here and take benefits from it, they will be taxed. Okay? So it's just a question of adjusting from one box to the other. Okay? Right, tax guidance. Okay, now I'm going to mention Irish pensions because there are a load of Irish people down here in the Algarve. But this will affect anybody who's actually moving from Ireland to any other country. The big point about Irish pensions is what is called an ARF. If you have an ARF, it's called an approved retirement fund. The crazy thing is, it's not a pension. Okay, according to the Irish tax authorities. Consequently, it's still taxed in Ireland, even if you're non-resident. So you come down here and you have the ARF, you're going to be taxed in Ireland. And that is really pretty inefficient. So we can show you ways to lessen that just simply by moving the pension to another plan. It's very simple. Saves loads of tax. Now, state pensions, these are unaffected. They're always paid gross in the UK without deduction of tax. But, of course, they are taxable in Portugal. There is an allowance of just over €4,000, which you're able to deduct from your pension amounts. Okay? There are, I know, issues in the UK now with pension rises, and they're going to be brought into the tax bracket. But the problem is they're definitely in the tax bracket here. QROPs. Now, this is a type of offshore pension which is used for pension transfers out of the UK. It's a very efficient plan, and it's also a very efficient IHT vehicle, because basically you're detaching yourself from the UK. And that in a vast majority of cases is a very practical step to take. QNAPs, now this is another type of pension. Again, it's based in Malta. It will provide you with income. It's based exclusively along UK pension lines, but another thing, like the QROPs, it's got inheritance tax exemption. So there's no inheritance tax on a QNAPs. It's a fantastic piece of planning. A lot of people use it down here. The other tax efficient vehicle down here is what is called a Portuguese compliant investment bond. Well, a bit of a mouthful, that, but again, it's the equivalent to the UK investment bond and the ISA. It's a mixture of the two. So in other words, it's got very favorable Portuguese tax concessions when you are resident here. So for example, like the ISA, there's no capital gains tax on any growth that you make in the investment. Okay. The other important factor to take on board is that when it comes to withdrawals, the tax on that withdrawal is only on part of the total withdrawal, and the eventual tax reduces to 11.2%. It's easily the most widely used vehicle down here for tax planning, and it's one that one should consider. Okay. Right, that's our logo. Trusted advice made simple, and that's what we try to do. The advice we hope is trusted, but the important thing is clarity, simplicity. It's not full of jargon. Well, you've got to do this, you've got to do that. We try to make it as simple and as clear as possible. Okay, and I think that's the last slide. I think the following slide is my details. So two things here. If I've said anything that you're not sure about, please get in touch with me and I'll send you a copy of the slides, because I have thrown quite a bit of information at you very quickly and it's not easy to take in. So please do get in touch if you want a copy of the slides. Equally, if you're not sure about anything I've said, please get in touch on an individual basis with any questions or queries you have, and I'm more than happy to answer them. Okay, I think that's about it, really.
Lovely. Thank you, Robert. Some great insight there.
Okay.
We've had quite a few questions, so I will start, if that's okay. I'll just make this a bit smaller so our viewers can see. Okay, Arup asks, how is interest income return on investments through offshore banking units treated for tax purposes in Portugal? Does NHR help?
No, NHR is not available from January the 1st, 2024. NHR is not available. So interest, dividends will now be taxed at 28%. Simple.
Oh, thank you.
Painful, but simple.
Manmohan asks, if we open an account for a company in Nigeria, then how is that bank interest taxed? Is income in Nigeria taxed as well? Right.
The point there is you'd have to look at the Nigeria-Portugal double taxation agreement. I have to be absolutely stone cold honest, I'm not sure what it says, but I'm happy to look at it. So if they'd like to get in touch with me with some details, I'm happy to look at that and provide the answer, because, as I say, to be honest, at the moment, I wouldn't know that.
Not off the top of your head, no. Okay, fab. I assume it might be the same for the next one. So if you pay taxes in Canada, would you pay anything more in Portugal?
Possibly. Again, it depends on the double taxation agreement and what that says and what type of income it is. So again, if somebody's listening and they've got a particular query on a particular type of income, then let me know and I'll look it all up and give the answer.
Lovely, thanks. Mark asks, are UK government pensions taxed the same way as other UK pensions?
Well, it depends what you mean by government pensions. Right. Now, first, there's what I would call, let's say, the state pension, the old age pension, whatever it is. Right. You come down here, as in the UK, it will be paid without deduction of tax. So it comes from the UK. The UK do not deduct any tax. It comes down here, it's taxable. But if you remember, you've got the allowance of 4,000, just over 4,000, so you can deduct that from the pension, right, and then pay tax at marginal rate. If by government pension is meant a pension from, let's say, civil service or any government department or arm such as police, army, doctors, stuff like that, those pensions are always taxed in the UK. Okay, right. And you get a credit for tax paid in the UK. You get a credit down here for it. So there are, unfortunately, two types of, say, government pensions.
Okay, oh, thank you. Stuart's asking, if I own a company outside of Portugal, will Portugal apply corporation tax to income?
No, basically because it's an outsourced income. So the answer is no. I can put the questionnaire, onto a specialist to give you some more advice on that, should you wish. So just let me know.
Okay, lovely. And what advice can you give regarding inheritance tax?
We haven't got a day, unfortunately. It is, on the face of it, it's a very easy, very simple tax, but underneath it, it's an absolute quagmire. Now, the problem is it's very much hot news in the UK. Is it all going to be changed? Blah, 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 blah. The basic underlying principle is that if you are a UK domicile, you are liable to the tax. It doesn't matter where you live. It doesn't matter how long you've lived there. If you are a UK domicile, you are liable to the tax. Worse, it's your worldwide assets. Okay, so if you come down to Portugal and you're still a UK domicile, you will be liable on your worldwide assets, which obviously includes everything here in the UK, Australia, Japan, wherever it is. There are various ways you can get out of it, but some of them can be quite long. But it all depends on the individual client and how committed the client is to reducing or eliminating the tax. Some plans or structures that I use, they really should be considered from a medium to long-term view. So in other words, 5 years, probably even 10, because you retain your domicile for a heck of a long time. So it's a big problem and it's a big issue.
Mm-hmm. Okay, thanks. And Arup just followed up. So he asked about the, does NHR help with ROI on offshore banking units?
No.
And he said it relates to someone who already has NHR.
If they've already got NHR and it's from outside Portugal, okay, that should be at 0%. Okay. Everybody is slightly different on that, but yes, people can still have NHR. That is subdivided as well pre-2020, 2020 and post-2020. But dividends, interest and royalties with NHR are taxed at nil for only 10 years. And then the problem occurs. What happens in year 11? It's a big problem because people then have to pay full rates of tax, and all of a sudden to go from 0 on dividends and interest to marginal rates, which could be as high as 48%, is one heck of a shock.
Yeah, definitely. Thank you. And finally, to wrap up, could you summarise why people should seek professional financial advice when they move to Portugal? And is there a best time to do this?
Right. I'll answer that backwards. The best time to get it is way before you get here. Okay. I deal with clients who I've been talking to for over a year to kind of get them to move, to plan, to make sure that the transition to Portugal is as smooth as possible. I put them in touch with all my contacts, the lawyers, the accountants, estate agents, removals, Forex. I try to get the whole thing into one package. And it takes some time to sort out. Getting a visa, if you need one, a D7 or a D2, that can take months. So the first thing is make sure you've got plenty of time to plan before you get here. The reason to use financial advisors like ourselves, to be blunt, is that we're on the ground, we've got the experience, we know what issues you're going to face when you get here, because we've done it many times before. And that transition period at times is not easy, but we can certainly help you overcome those hurdles. Absolutely no problem at all.
Fabulous, thank you. And yeah, just to reiterate what you've just said, Robert, we strongly recommend that you get in touch with Chase Buchanan directly, and Robert and his colleagues will be able to talk you through your requirements in detail.
Sure.
We will be in touch with their details if you didn't catch his email just there.
Okay.
Before we finish, I would like to invite you to leave us a review on Trustpilot if you found this webinar particularly helpful. Thank you to Robert for sharing your knowledge with us today, and thank you to all our listeners for joining us. So thanks again, and happy property hunting.
Yeah, thank you very much, everybody. And if you need anything, please do get in touch.
Lovely. Thank you.
Okay.
Bye.
Thanks. Bye-bye.